So that is one of the things that I usually tell sellers when I meet them, that if you're B2B, then it does not make sense for you to receive credit card payments. Unfortunately, because of the amount of innovation and the amount of money that has gone into credit card acceptance products and payment gateways, a lot of people don't know this and continue using very expensive credit card payment gateways to receive their payments. So that's not a great idea, especially if you're B2B.
Hey everyone, I'm Akash, co-founder and CEO of SellerMate.AI. Welcome to our podcast. Uh, in this episode, I have Movin Jain, who is the founder CEO of Skydo, a cross-border payment solutions. Right. So yeah, let's get started. So Movin, why don't we start with like a brief intro?
Definitely. Thanks, Akash, for the intro, and thanks for having me on your podcast. A brief about me: I'm one of the two co-founders of Skydo, which is a cross-border payments platform. We've been working on this for about 4 years. I'm based in Bangalore, India. And before this, I've worked with various startups across industries, mostly in product management roles and to some extent in engineering roles as well. This is my second venture as a founder. And most recently, before starting Skydo, I was leading payments product at PhonePe.
Nice. Right. So why don't you like why did you get started on Skydo, right? And what are like the larger problem you are trying to solve?
I think for me, having made some really obvious and naive mistakes in my previous startup, I was, for the past few years before starting Skydo, I was looking for ideas and co-founders. Um, and while I was not in a hurry, I knew that my eventual destiny is going to be an entrepreneur. But because I want to, have a better chance at success this time and not make those same mistakes again, I was waiting for the right moment, to create the right kind of opportunity and for me to succeed. So in that context, got a great opportunity at PhonePe, meanwhile, to work on their payments platform. So I led their product team, the payments platform product team, for about 2 years. And that was, I think, one of the most interesting stints that I had as an employee. I think PhonePe is a brilliant company. They've built a brilliant culture and they've also built a great product. Um, and it helped me appreciate the complexity of payments and also understand a little bit what does it take to win in this industry, in the payments industry, and also what does it take to deal with stakeholders like RBI, NPCI, and so on. So I had got that confidence that payments is something where I can make a mark, and it's something where not everybody can succeed. Um, and that was something I was constantly looking for. What is that one thing which I'm good at, which others are not? Or what is that one thing which I can do better than others? Because then that could be a great space for me to start up. Meanwhile, I caught up with Srivatsan, who has been a close friend for last many years. We worked together in Ola, and he was also working in a different fintech company, and he wanted to start up in fintech and build a large global business. And he was also passively looking for ideas and co-founders. So I think the two of us gelled together and we started brainstorming. Took about 6 months to iterate through various ideas within fintech and within B2B, and finally came across cross-border payments. He has been a exporter actually in his one of his previous stints, where he was actually running his family business, which was started by his father. They manufacture automotive components in Chennai and sell it domestically as well as globally. So from his experience as an exporter, we knew that cross-border payments for businesses is quite broken, particularly in India and other emerging markets. And so that could be a good idea to solve. So coupled with the confidence of being able to build a payments company from PhonePe, I think it became a good idea for us to start.
Right. I think there are like a lot of great lessons that could be learned from that story. Right. I think a lot of entrepreneurs rush very early in their journey to start. Right. Whereas like building domain knowledge in a space, right, actually does help a lot. Right. I think both you and your founder did come from a back from a couple of years of experience in the fintech industry, and then even like one of you worked as as a cross border seller, right? So So what makes the global payment industry so challenging, right? So that it was like a big enough problem for both of you to start tackling.
If you allow me, I'll take a very 101 lens to answer this question, just so people can understand it. I think at some point about maybe 6 7 years back, I was an outsider to payments and definitely to cross-border payments, and I thought, what is so complicated about payments? You just have to move money from one account to another or one card to a bank account and so on. How can it be so complicated? But once I entered PhonePe, I realized that there are very strong reasons for it to be so complex. So let me go through a few of them. See, when the global economy and the current model of money started taking shape, every country had their own system. Every country had their own rules and regulations, their own currency, their own way of dealing with that currency, rules surrounding it, and so on. Um, so it was not necessarily coordinated. The US was not talking to India or Nigeria about, what the currency should look like, and what should the conversion rate be, and how do we solve for people who will move from India to the US, or make a payment from Nigeria to Brazil, and so on. That was not really top of mind for any of the people who invented money or currencies, or digital money, or created any of these regulations. What they were trying to solve for was just domestic trade, domestic, buying and selling of goods and services, and that is how money was invented. Right now, over time, people started traveling, people started doing global trade. So whatever infrastructure was built for global trade has only been created as a patchwork on top of the concept of money and currency. Right? Nobody thought of money as one day there will be global trade, so let's build something called money which can support global trade. So, which is why technologies like Swift, and any other legacy technologies that we see still in use today widely, being used to make cross-border payments, they are all basically afterthought after the underlying structure, regulations of each country, everything was already there. So, for example, there are certain countries like India with which are closed to capital flows. There are strong restrictions on flow of money inside and out of the country. And then there are countries like Singapore and Hong Kong and Dubai, which are not closed. Now, they did not create these rules thinking about foreign trade or cross-border trade. They thought they created these rules because that is what was best for the country and its economy as per the regulator or the government, right? Now, hence, each of these rules is very country specific. So when you're doing cross-border payments, when you're building a cross-border payments platform like us, you have to take into account individual countries and their regulations. And whatever you do, ultimately every payment will, originate in some country and land up in another country. So at least both those countries' regulations have to be complied with, and that's not an easy job. There's several permutations, combinations. Every regulator has a different way of expressing themselves, and very different requirements. So for a cross-border payments platform, you have to bring different regulations, different cultures, different expectations, and different unsaid rules together, and marry everything and say, okay, what is the common minimum that can be done in both countries? And that is how my platform will work. So I think that is one thing which makes payments, so cross-border payments, so complex. But if you just talk about payments itself, not even cross-border, I worked on UPI at PhonePe. I think even that is complex enough, and the reason for that is there are different banks, different bank accounts, and different people who are transacting with each other. So multiple systems of multiple banks have to talk to each other. And money is not something where if a mistake happens, you can recover from it. For example, if I was paying you via UPI, my money did not get deducted and you got credited. I could actually end up using that money in the next 1 minute, and you could end up using that money in the next 1 minute, which means that the payment platform or whoever was facilitating this transaction will actually lose that money. So which is why a simple race condition, which an engineer who's building technology in a naive way could actually make a mistake. But in a payments platform, that is end of the world. Your business will suddenly shut down. You will lose millions of dollars if a small mistake like this happens. So that is the reason for complexity in payments. And um, that's also why um, very few companies are able to build a reliable and sustainable payments platform.
Right. So that was really, really insightful. I never thought uh right about payment as such, right? Being so complex, right? It usually the user experience is pretty simple, right? You add some person's account details and you send them money, right? But a lot of moving parts behind the scenes, right? So I think that was really insightful. So now if we look at it from say an Indian seller who is selling globally point of view, right? So what are some of the key things they should be looking out for? And what are say the places where say a platform like Skydo could help them, say in terms of compliance, in terms of management, maybe fees.
Yeah, I think India is an emerging export economy. We're doing pretty well globally in terms of exports. Of course, last few days have been hectic and stressful given the news around tariffs and all the speculation around tax on services export and all that stuff. But that notwithstanding, I think in general, India is doing well on exports, and our government and our central bank and even the people of India really want to do more and more exports. And some of our products are being globally appreciated. Uh, E-commerce exports is of course up and coming and only has existed in the last few years, but there are now a few platforms like Amazon, Walmart, Etsy, eBay, etc., which are growing pretty well and focused a lot on India. China has had huge success in this over the last couple of decades. So I think we, as India, also now need to create the infrastructure and the resources for all of these global sellers to make a lot of progress and bring precious foreign exchange to the country. So I think I am very, very bullish and optimistic about this space, and I'm really thankful to all the Indian sellers who are trying to take Indian products global. Now, to answer your question, I think um, one of the things that we recognized very early on in the Skydo journey is that if, as a seller, you are selling directly on your website, which is theoretically called D2C. Let's say you are selling perfumes on your website and an American person is coming and buying it. So typically the ticket size will be $100 to $200, or somewhere in that range. And typically an American consumer would want to pay using credit card. So there you don't have too many options. You have to have a payment gateway like a Stripe or a PayPal or a Razorpay and so on. And you'll have to embed that into your website, into your app, and receive payments via that, right? And there the charges are usually high. They typically range from 5 to 8% depending on which platform you're using. And I'm talking about Indian sellers receiving from global consumers. These charges include forex markups, by the way. A lot of sellers think that, oh, I'm only being charged 2% or 3% because that is what the payment platform says they are charging. But there is also a charge that they do not clearly say, which is actually the forex markup. If your USD INR rate is 87, the payment platform might convert your dollars to rupees at 85 or 84. So you're losing 2, 3, 4% there as well. So what you should do is add both these charges, the charges that are already mentioned, plus the forex markup, and that's the total cost of receiving global payments. So that typically for card payments happens to be in 5 to 8% range. Now, when you're selling $100 perfume, you have no other option. You have to pay this 5 to 8% because credit card acceptance is expensive. Um, but if you are not doing that, if you're not selling perfumes directly, for example, you're selling via a marketplace like Amazon, or you're selling to some company in the US who's then retailing the perfume for you. Let's say you are selling to Walmart and Walmart is stocking your products in their stores, in their retail stores, and then selling to consumers. In that case, it's a B2B transaction, and you're actually most likely going to send a large consignment. You are not going to send a single perfume by courier. So in those cases, it does not make sense to pay the 5 to 8% fee and accept credit card payments. Credit card
Right.
was built for consumers, not for B2B transactions. So typically in B2B transactions, what is usually used is Swift. Swift is a 50-year-old technology. There's been a lot of innovation in credit card space over the last few years. Companies like Visa and MasterCard have really built amazing technology and have continued to become better. And all these payment gateways then leverage those networks and that technology and then have built their own layers on top of that technology to be able to provide a seamless experience to the consumer and to the merchant for credit card payments. But in business to business, credit card payments are just too expensive. So you cannot use the benefits of all of that technology and innovation that has happened over the last 10 years. So which means that you are left with only Swift, and Swift is legacy technology. It's slow, it is painful, and it does not accommodate for a lot of the new stuff that consumers, buyers, sellers, and the general trade ecosystem wants. So that is the problem that we identified at Skydo and are trying to solve. We are trying to build a platform which buyers and sellers can use to make payments to each other or receive payments from each other, then account for those payments, reconcile those payments, send reminder, ledger, all of those things to each other uh, as an alternative to Swift. So that
All
is
right.
what we are doing, which means that it provides you the same benefits of innovation and technology because we are a new age company building new age technology, but not the charges, the 5 to 8% charges that usually the credit card world has. So we're kind of bringing the best of both worlds: great commercials and great technology. So that is where Skydo sits. So any seller in India who's selling B2B or selling via marketplaces like Amazon, which means again they're receiving bulk payments from the platform, in all of those cases, um, Skydo is actually a significantly better solution than Swift or credit card, and that is really our focus. So that is one of the things that I usually tell sellers when I meet them, that if you're B2B, then it does not make sense for you to receive credit card payments. Unfortunately, because of the amount of innovation and the amount of money that has gone into credit card acceptance products and payment gateways, a lot of people don't know this and continue using very expensive credit card payment gateways to receive their payments. So that's not a great idea, especially if you're B2B.
Right. So I think couple of follow up questions, right? So can say there are a lot of SaaS companies in India right now, right? And who are exporting their product to like US, Germany, right? Multiple different countries. So can they also use your platform? Because I'm just thinking about ourselves, right? We have multiple clients who do like couple of $1,000 a month kind of a payment to us. So can we use Kaido as well for SaaS platforms, or is just limited to merchants and physical goods?
Great question. So the short answer is no, you cannot today, but in a few months we will be changing that to a yes. The reason is, again, as I said, all the innovation that has happened in the card space hasn't really happened in the account to account space. So what Skydo does is, money moves from one bank account to another. UPI is an example of account to account money movement, and that's the reason it is so cheap. I mean, of course, it's a different fact that the government has mandated it to be free, but the very reason that the government is able to do that and able to force the entire ecosystem to offer UPI for free is that account to account money movement is almost free.
Right.
Um, so, so that's what Skydo is also trying to do, but globally. And globally, because there is forex conversion involved, unfortunately, we cannot offer it for free. We have to charge something to make sure that the forex conversion gets covered, and there is fluctuation involved and so on. So to protect our sellers from that, we have to charge something. But um, the basic fundamental truth in payments is that account to account payment is near free. So that is where the uh, the innovation that has happened in the last 10 years hasn't focused a lot on account to account. So for a SaaS platform that's charging $2,000 per month, uh, to receive recurring payments is a great idea because the customer doesn't have to make a payment every time. The customer can just set a mandate and then every month you get paid. So now that is available in cards. not so much available or accessible in account to account, but we are building that. In domestic, to some extent, it is now available. For example, in India, you have NACH mandates. NACH mandates are also cumbersome. So UPI has come up with its own auto pay, but there are upper limits on transaction size because UPI is again built more for consumers. So on the B2B side, transaction sizes can go as high as 10 lakhs, 20 lakhs also, or a few $1,000s in the cross-border space. So we are building for that ecosystem as well, where there will be recurring payments, mandates, subscriptions, all of those things.
Very excited. Do let us know. We would love to be your beta customer. Right. So maybe more like what are maybe some of the examples, right? You or maybe case studies you might have of say using your platform, and like basically at the end of the day it will save a lot of money uh,
Absolutely.
to sellers brands.
I think couple of cases come to mind. One of them is actually one of our first customers. So this person graduated from college and started a startup immediately, where he was building CCTV technology and selling it to households. In about 3-4 years, that business did not take off, and he pivoted to a technology services company where they were doing AI technology services. So they were building AI algorithms and applications for foreign companies, for foreign clients, and they were based in Bangalore. Now, we were trying to find out who needs cross-border payments in India, or who's fed up of their current cross-border payment stack and wants something better, because we wanted to understand what are the different use cases that we can solve. This was very early in the journey of Skydo, when we had just raised money and started recruiting our first 1 or 2 team members, but still didn't have a product, and we were still figuring out what exactly to build. So I put out a tweet saying, this is what we are trying to work on. So if anybody is facing problems with cross-border payments, please reach out to me. This person reached out to me and said, I'm fed up of my bank, because every time I receive a Swift, it gets delayed by so many days and they charge me so much. And I've never been able to find out why they charge me so much. How can I reduce it? They're not even telling me how much they charge me, and so on. So I was obviously really excited to see this response to my tweet. And so I set up a call with him, got my couple of other team members, including my co-founder, on the call, and we understood what his pain points were. So the moment we finished that call, everybody had a glitter in their eyes, because we felt like this is exactly the customer that we are trying to build for. Um, it was like we had found our first customer. So that was a really exciting moment, and since then we basically treated that person as like the ideal customer, almost like placed a photo of him in our office and said, okay, if we are building something, we have to build for this guy. And at the end of it, when we launch the product, this guy has to be really happy and say that my life has changed. And that actually happened. So when we built the product, he agreed to onboard as one of the first customers. When we moved into a new office, once we started hiring a bigger team, he actually cut the ribbon of that office, and so on. So since then, he's been a close friend. So that has been one story in our early journey. I'll move on to the next story. So um, recently I've met several companies in India, and even several sole proprietors and individuals who are selling on Amazon. Um, and they it's brilliant, the kind of stuff that they have figured out that the global consumer needs, and they are selling those diverse things. Obviously, we have a large textile industry, we have a large handicraft industry, we have a large leather goods, wooden goods industry, but there are also a whole lot of long tail things that Indian sellers sell. So a lot of them, when they sell on Amazon, the default way in which they end up receiving payments is they will just put their Indian bank account on Amazon seller dashboard. Uh, but actually, what happens there is, because this is an export payment, Amazon will first receive the money in dollars, because ultimately the global consumer is buying in dollars, euros, GBP, etc. And then Amazon is doing the conversion and sending you rupees. And that conversion is pretty expensive, because Amazon has not tried to make it super efficient yet. But what the Amazon ecosystem has now is that they have a process for approving PSPs. PSP as in payment service provider. PSPs like Skydo, So Amazon can give approval to PSPs like Skydo to say, okay, instead of me processing this payment, Skydo will process this payment. So in that case, the seller can actually go and create an account on Skydo, put that account number into Amazon. Amazon will accept it because Skydo is approved by Amazon. So we got our approval last year. It was a pretty long approval process, but we are now one of the few approved companies in India who can process Amazon payments. So then you put your Skydo account into Amazon, and in that case, Amazon will not charge you anything for the forex conversion, and Skydo will do all of that for you at a very transparent and low cost. So that is one of the things that recently, now we've onboarded several sellers who are selling on Amazon. Of course, last couple of months have been tough for these sellers because of the removal of the de minimis exemption. But overall, we see at Skydo that this is a very large and growing segment in India, and we're very bullish about its future in the long term. Um, and not just US, but people are selling to Australia, UAE, UK, Canada, and so on. So we support all of those transactions as well.
So that's an amazing tip, right? So tell me, right, if I understand it correctly, right? So sellers can add their Skydo account on Amazon, and then instead of Amazon processing the entire payment, Skydo will process payments for them, and it's way more transparent, and way less expensive.
Exactly, exactly.
Uh,
So Amazon has basically a small list of approved PSPs, and Skydo is now one of them. Some of our competitors and some of the global companies in the cross-border payment space are also part of that list. So, which means that we get audited by Amazon to make sure that we are ensuring data privacy for all these sellers, and we are a secure platform, so their money will not get lost and so on. So Amazon does all of that to make sure that their sellers have a great experience and are safe, but ultimately we are able to process those payments at a much better cost and speed.
Perfect. So how much, say, a typical seller would save in terms of percentage, or maybe is it like more of like a flat fee, they would say?
So it's a percentage. What typically people get charged when they do not use Skydo is somewhere in the range of 2.5, 3%. In some cases, could be more for certain currencies, but from what I've seen, for at least for USD to INR, it is 2.5 to 3%. Whereas in case of Skydo, we charge less than 1%. So
Okay.
for sellers who have less than $10,000 of monthly revenue, we charge 0.5%. For sellers who have more than $10,000 of monthly revenue, we charge 0.3%. And this is the only charge. They don't have to worry about, at what rate will my forex get converted and so on, because we convert it at the mid market rate. So there is no other cost.
Perfect. So like anyone who is selling, they can just immediately add 2 to 2.5% to their top line just by
Exactly.
switching the payment provider.
Exactly. And
Awesome.
and the other requirement here, because this is exports, it is covered by RBI's guidelines on foreign trade policy, import export master directions, FEMA, and so on. So there is a document called FIRC that is required by any exporter for every transaction, and then they have to close their shipping bills in a ledger that is operated by RBI. So this is a compliance requirement, and so we issue that document to them, which is, it has to be issued on a bank letterhead. So we have a partnership with HDFC Bank, and we issue it on their letterhead, that this much money was received, and so on. So all these sellers usually get GST refunds because export is GST exempt. But along with being GST exempt on the outputs, an exporter can also claim GST refund on inputs. So, which for which they need this document to be shown to the GST department. So we issue this document, and we have made sure that this document has all the relevant information required for them to get these refunds. So that is the other thing. We've seen that a lot of small sellers have not yet figured this out and are missing out on this additional benefit of GST refund on their input costs, because this is allowed, and this is completely legal, and it's the right way of doing an export business. I would suggest that if you're an Amazon seller and you're not taking GST refunds for your input costs, please start doing so.
That was such an insight packed conversation, Movin. Thank you so much. Right. So if you're a consumer brand trying to expand globally in different markets, I hope you found this podcast helpful. Big thanks to Movin.
Thanks, Akash.
Thank you for joining us. Stay tuned and follow us for more exciting conversations in the future.